All right, good morning, everyone. Welcome to the London session on TopstepTV. Got a couple of trades going here, so we're going to talk through them. But before I start, if you're new here, my name is Deeyana Angelo. I've been trading for about 16 years, nearly 17 years, and 12 years out of that, I've been trading futures with various prop firms, mainly specializing in crude oil. But also trading gold, and then occasionally towards the end of the day, I pop in an ES trade. I consider myself a systematic trader because of the levels that I use, because they're always going to be kind of similar. However, there is a lot of discretion over contextual nature of the market that we currently have. All right, so let me just go to my area here. Okay, awesome. So we're all good. Let's talk through this crude oil trade. So this was a trade that I like doing if we are going into the London market and we are a little bit away from overnight VWAP. So let me just go in a little bit more granular here so I can show you what the entry is. So it's effectively just a bounce from VWAP, right? So we effectively open away from it. Yesterday we opened kind of close to it, so it was like, this is horrible. And then we got up to VWAP, rejected it, and went into like a tiny little failed auction. So when we're away from VWAP at open, you have to get that initial movement up to VWAP, and then what typically happens on the first run to it, you can get this like little scalp that we're seeing now happening. But at the same time, I'm not really that happy with this price action, so I am gonna book this just to to get not to get too caught up in the minute movement, and then we're gonna see if there are any other potential trades there. Now equities, I can see that ES is failing its auction, but for me this gold looks like it's breaking out of the initial balance, so that's what I'm doing here. So again, let me change this and then maybe go to a 30-minute chart on here. I have a level at 25.25 that I'm targeting for some sort of 60 ticks, and looks like maybe GC might be a better move today, or it might move better today. I do have some levels that I was looking at yesterday around, what was this? This was a supply at 25.36, and throughout sort of the entire Asia, we couldn't really break that. So that's why I figured, well, we might want to try this little breakout trade. So the supply that I'm talking about is all the way back. What date was that? It was the 6th of September. And it was made during COMEX. So 25.36.5 was where the previous sort of major sell-off came from. So that's the area that I'm referencing there. But yeah, what I'm looking for here is for some more committed movement below initial balance. Let me just put that on my chart here so I can have a reference. And really I want this to go down to the value high, which is closer to that 25.25 level, but it's actually at 25.27. So we'll see if that has any legs. So my entry here. Okay, and then 25.34.6. Okay, so I have some references there. So the trade that I'm doing on gold is effectively a break of initial balance with a view to go back to the value. So it's effectively a mean reversion trade, gap fill down to London value high. Now some of the other levels that I'm doing on crude oil today. I have some levels further down. So yesterday that 67.50 area really was the decision point. And we got that reversal, right? So I was saying that my ideal entry would be at 67.50. So we got that, right? It was ultimate demand reversal, and off it went, but it was super choppy. It was so choppy. It was very painful. And now those levels have actually moved down a little bit. So I would be looking maybe at 67 to 67.18, and then further down from there, if we continue to jump off a cliff, 66.50 would be an area to watch out for. And then to the top side, nothing's really changed. You know, I still have that inventories low area at where was that, 69.70 roughly. So in that sort of 69.70 up to 70 evens would be an area of interest for today as well if we start to go back up. So those are some big sort of peg levels. And I always like to look at it as a sort of 30 to 40 tick zone on crude oil. And anything in between, you know, a little bit more difficult to read, which is why I'm not staying in the trade for too long, even though I suppose this one would have worked out. But still, I was kind of having trouble starting, stopping. And it's the time of day when crude oil likes to do a bit of a fake out, and then it goes into a neutral day, and then it just doesn't do much until much later on. So yeah, so let's keep an eye on this gold. Don't think we've got much on the news front, so I'm gonna check the calendar. Yeah, I mean, it's very quiet. We've got some FOMC members yapping later. And we have a Bank of Canada speaker during the overlap at 1:10. But, you know, we'll see. Okay, so I'm just going to see whether we've got some plugs to do before we carry on into the questions. So if you've got a question, please pop them in. Okay, yeah, of course. So we have the Coach Dakota takeover starting from tomorrow, and he's going to continue the takeover with like a marathon 3-day broadcast session to replace the main broadcast, obviously. So he's taking over TopstepTV, and that's happening Wednesday, Thursday, and Friday, while the rest of the team will be away for a company retreat. Now, I'm going to be joining him. At least on Thursday for 1 p.m. Central. That's like 7 p.m. my time. And then on the calendar it says Friday as well. So I'm gonna have to double check whether that's actually also happening. But yeah, I'm gonna be hanging out with Dakota this week, so that should be pretty cool. We always have a laugh whenever, like last time that Rips did the takeover. It was a pretty fun time to join them. And this time around, you know, I'm expecting, some shenanigans, lots of good trading, and joking and banter, as always. All right, let's have a look at some questions. Jason Thompson, good morning. So he says, you mentioned initial balance and failed auction for ES. CLGC, are these based on London Open? Yes. So whenever I'm referencing the London session, the initial balance for that time period is the London session opened, which is from 8 a.m. till 9 a.m. our time. So yeah, very easy. So straight on the hour, and then you effectively just look at how the price behaves around the edges of that. So we are either looking for failed auctions, or we're looking for breakouts if the market structure from some larger time frames corresponds to that outlook. On gold, because we're so high up in the overall structure. Like if I go up on the daily chart, I mean, it's still very messy. We're still in that balance. I'm expecting a resolution of this balance. You can't stay in balance forever. Like at some point we have to break. Usually if you are a Wyckoff devotee, Wyckoff says that after distribution there's a very high chance of that liquidation period starting, and then if I'm seeing a breakout to the downside of IB of London, yeah, I'm going to try a short trade, purely because of the stats around the distributions. Now, we have the range that is further down, obviously at 2502. That remains a more longer term area of interest on gold. Because that's like that has acted as a support, right? So if you look at where the previous pop happened, it was just above that, like 2503, 2502.9, if we're gonna like really nitpick. And then we have a larger demand area at 2494. So literally that whole zone of where the price reversed before, where the extra demand is, the edge of the demand, of course, that all becomes an area of interest for me. And once we're there, you can look for some bigger sort of intraday swings. But until we get there, you probably have see money, take money sort of approach, because anything away from those levels is going to be a little bit tricky. Now, on the day, we can find bigger reversal areas via my average session ranges, average daily ranges, and all of that. But anything in between, if you are away from the big pegged areas, is going to be a bit trickier to find a pretty good edge, right? So this is why sometimes I will do scalping if we're in a neutral day, away from any sort of weird levels, then, or if we're at weird levels where I don't really have a clear read, that would be more scalpy type situation where I will try to take 30 to 50 ticks and then just kind of, bail. But if we have the option to kind of stay in a little bit longer, for maybe 100, 120, 150 ticks, maybe even 200 on some occasions, I would be looking for those bigger reversal points, right? So Joe says also, are they supply and demand zones? So the way I trade, I use a mix of supply and demand, then some interesting sort of options levels as well, because they do play into consideration, especially during COMEX and NYMEX, after the initial balance of COMEX and NYMEX. So those times will be slightly different because COMEX starts a bit earlier. It starts an hour before the cash session. So then you cut off its own initial balance, just basically as we're opening the cash session in equities. And then crude oil will be half an hour before the cash session. So, they do have slightly different mechanics underneath, purely because of how the open pits hours used to happen. So the initial balance and the COMEX NYMEX start times are literally just that. They are old pit hours. And back in the day after settlement, you wouldn't even be able to enter or exit a trade that you already have in the market. So, we still see that behavior carried over into the electronic markets. So after the settlement officially, the volumes will drop off. So start times and end times still the same when you look at volumes. But, because we have electronic trading, it wouldn't be my choice, primary choice to trade gold and crude oil, but, that's what we have right now. Otherwise, I would probably be looking to trade DAX or to trade, even Nikkei moves pretty decent for at least the first couple of hours of London. So, all of those are considerations of consistency, what moves the most consistently for this period. I've got to say crude oil and gold probably not it, but, we work with what we've got, yeah. So, yeah, sometimes gold can move well, but you have to watch out for the times when you really don't have that much movement. So today we did drop off pretty much at the start of the session, and we are staring at about 77 tick move. I mean, that's not bad, right? It's not bad for London. And yeah, so like I said, I do use some options data as well, which I'm not going to go into right now because it can be really complex. But it can be helpful to figure out whether you're going to have some movement or good movement, or whether you're going to be sitting in a very quiet day. You also have some bigger option expiries that could come into play. However, that's probably not that relevant for this part of the day. I look at those as we kind of get to the 10 a.m. New York. So that's 9 a.m. Central and 3 p.m. London time. So once we are there, if I have an interesting level in regards to the options, then I might consider doing a trade off of that information as well. And that typically tends to be a reversal of some sort, whether it's a failed auction, an auction fade, or, you know, neutral date type situation. That's again contextual. So yeah, a lot of kind of granular detail that you can lean on. So Stefan, it looks like, or Stefan used to what am I trying to say here? Let's start it again. Stefan says CL already made my day, 68.30 long for VWAP 68.58. I also see it long, but are there any facts why it's so low? Yeah, so we have some oversupply issues at the moment because so 2 weeks ago we had some news out of Libya, how they've shut down their production, and then there was also some other news about OPEC not doing or doing production cuts. I don't know, I can't quite remember 2 weeks ago exactly what was the problem, but as a result there was a worry about supply. And then they came out with a complete opposite picture the very next week. And they're like, actually, we have declining demand in crude oil from Chinese, which accounts for 15% of the world's oil demand. That's a lot, right? And then right as that was happening, Libya came up with another information that they have restarted production of crude oil, bringing in more supply, which drove the prices even lower. And then we also had some news from some delegate from OPEC Plus, who came in to say that that the production cuts will not be going ahead. So all three of those news drove crude oil much, much lower, because now there's like a worry that we have an oversupply, that we're not going to have enough enough places to store it and whatever. So prices just kind of dropped off. So whether that continues, nobody really knows. But yeah, crude oil is in a bit of a tricky spot at the moment. However, I don't care as long as it moves. The only thing I don't want to see in crude oil is that we get stuck in a no man's land, and that we kind of start doing what we've been doing for the last 8 months. Just get to post NY cut and then nothing. So as long as we've got movement, I really couldn't care less what they're doing with it. I just want to see movement in crude oil, right? And then we can trade it, no problem. But if there's no movement, no one can trade it in outright markets like this, right? You would need to start applying some more market neutral strategies, some option strategies, But markets that don't move, or they're very choppy and range bound, they are not very good for what we're doing here. You need liquid markets that have movement intraday and pretty consistently throughout the day. As soon as that dies out, crude oil becomes a pain to trade intraday. Okay, Joe says, could you please explain how do you make an entry for an initial balance breakout? Yesterday, during the New York session, I tried an IB break for ES. It was very choppy and stopped me out later and moved very fast. Okay, so the whole thing about initial balance breakouts is, again, contextual. So you can't just do breakouts willy-nilly, right? You have to be at some sort of a relevant level where you might want to do a breakout. And yesterday in ES, we actually had a test and a fake out of the value low. So really value high. So we went into gap fill, which wasn't that big, but it was still gap fill. And then we went away from that during the initial balance, right? So it actually turned around from a high, let's say, inflection point, high probability inflection point, where you might want to get some sort of either a run through to the level or a reversal. So for me, an initial balance high yesterday in ES actually went straight into one of the ADR levels, and when that happens, well, you're going straight into you're going straight into the statistical level that brings reversals. So we don't want to do that. You want to be, going against that. You don't want to be doing breakouts into a high probability reversal level. That's, very dangerous. Let me just bring up my ES chart on my other Blatek indicators. That's going to stay away from the screen. Yeah, so the breakout literally, so I have ADR high from yesterday exactly at 54.77. That's where you did a breakout. Now the thing with ES, it will overshoot certain levels. So if I look at the structure here, so we had, let me just get my data points here. So 54, 79, 80. Okay, let me put a line in so I can visualize this for you. And why that trade was a bit terrible. So that was your ADR high. Yeah, that was the ADR high. Now we're talking about the initial balance breakout. Yeah, that so that wouldn't have been a good trade to the upside. Now to the downside, again, not very good, because you had the value high at, let's say, 54.49. So I'll show you how that looked. So 54.49. There we go. And then we have the initial balance, just roughly like that. So for me, initial balance breakout, when we're in between high probability reversal points, this is it's a nonsense trade. It's a complete nonsense trade, right? Because look, breakout to the downside, your profit margin down to the high probability reversal value high is what? 5 points? I mean, that should be the stop size, right? 5 points. So really, I was expecting this to be a fake out, right? The only time I could do a breakout trade is if we accepted value and then went further, but that never actually happened. We touched it, tested inside it, reversed away from it. So really a failed auction long would have been the higher probability trade there. And then if you were doing the breakout to the upside, well, you already have a neutral day possibility. And let's say that we didn't break the initial balance to the downside, that you were going with breakout to the upside. Well, you're going straight into the average daily range high. Statistically, that tends to bring reversals, and we overshot a little bit, but it came back down. I did have a trade in ES yesterday, which was targeting this area because of the time of day that it happened. So I did do a short, but then I had to deal with one of my dogs who was throwing up. And I didn't set my target at VWAP, which should have been my target, and then it started reversing on me. So I didn't manage to properly manage that trade. And as a result, in one of my journals, I now have a reminder. Neutral day is equal to target at VWAP. So just so that I don't try and look for more. My frequent problem is looking for too much out of the trades. So it's a strength because I can trade through many hours and just stay in one trade idea without any afterthought. But I can also start a trade as a scalp and then I decide to hold it longer, which is like, stupid. But so yeah, I in my head need to have multiple ways that will take me out of a trade to prevent that particular weakness of mine. So if I'm looking for a shorter term trade, I absolutely need to just say, okay, that is the quick target. Do not touch it. Or if you don't get the movement you're after, exit. But I understand that a lot of other people have slightly different problems with overmanaging and not staying in trades long enough, so that's an entirely different problem to mine. We're all different, we all have different life experiences. And I was a swing trader for like almost 6 years in the first few years of my career. But yeah, the breakout from the initial balance has to be done away from those sorts of levels, right? So ideally, you want to do a breakout where you have nothing in the way, right? Or you're going straight into the value acceptance that's already appeared. But, you have to be really careful where your other high probability orientation points are. Now, in my methodology, in the Marcus Stalker's method, we teach you these. That they're dangerous points that you shouldn't trade into. Just like if you have supply and demand areas, you wouldn't necessarily do a breakout trade into a supply, into an overhead supply, right? So you're doing an IB break to the upside and the supply is just there. What's going to happen? Well, it's going to smack into it. There's going to be some sort of reaction to it, right? So that's a terrible trade. Sometimes I see people going into breakout trades and I'm like, what are you doing? It's just terrible. And then you have people like Dakota, who is always mindful about the swing extremes. And in a way, he also, he calls it support and resistance, but effectively it's all the same thing. You're looking at areas where the swing highs and lows have been, and you try not to go directly into them with the opposing trade. It's something that won't work in anything apart from a very, very, very strong market environment. So yeah, with the IB breaks, we need to be mindful of the trade location that you're taking that trade in. Otherwise, no. Pip Trader says, Pip Trader 2.0. I like that. So 2.0 version. We've done the beta testing and now we're live and it's 2.0 version. It's a great username. I started using Dome yesterday for the first time. There was a big short order above price to short, and it just kept moving up with the price as if it was trailing. I was watching it for hours. Is the Dome even helpful? Okay. So Pip Trader, if you look at the Dome, especially on ES, I'm guessing it was probably ES because we have something that we've been referring to. I've been referring to it as algo sandwich or algo bros. So the thing in ES is that they've been running this algorithm. It's not on right now because it would have been present as a chunk of orders up and above the price, and then they just kind of chase the price. So you have to be aware of those sort of activities, and throughout the entire summer we have the algo sandwich in progress on ES. Another thing to note is that sometimes these areas of liquidity are just an excuse to go and grab those orders in order for them to run all the way through them. On ES, they like to fill the orders. If you hear Andre saying things like paper gets filled, what does that mean? Well, paper refers to the number of orders that are on the ladder, right? So you can see where the orders are sitting. So the way ES moves is that it likes to fill those orders, run through them, and then maybe do a reversal. However, a lot of the times what's going to happen is that they're going to run through them and then maybe use them as a springboard, especially if a lot of orders are nearby. They will act as a springboard more often than a reversal. But if you see dedicated orders at one level and then a little bit higher up, those are the ones that I like to target for areas of entry. But you cannot use the Dome, at least I was never able to make it work for me, just by staring at the dome, right? I need to have another thing that I might be looking at. And that could be anything. It could be a supply. It could be an average daily range or average session range, high or low. It could be a value area. Like it has to be something over like a reason as to why you would expect the price to reverse there. I know Nick for a tick looks at the gamma walls and option expiries and a whole bunch of other stuff, and then he looks at the delta flip around those levels. So there are many ways to use those, but you cannot just go, oh, there's a bunch of orders there, then let's play. At least that never worked for me. So I have to have a statistically probable level why I'm looking at a reversal there, and then only then I might consider it as a level of interest. Otherwise, I'm not particularly interested in it, right? The way I do ES scalps towards the end of the day would be to look for something like that. But again, even then I have the initial balance test after, like let's say we went into a good downside auction and then now we've run all the way up to the initial balance low, and I'm seeing, or sometimes it's even a low volume area or a single print area left on the way down, right? Then I will look for a stack of orders that will exactly match the filled single prints or a filled low volume nodes on the volume profile. That becomes my area of interest. So it's not just like, oh, look at the dome, click. There's a little bit more to it. If this was simple, I constantly see people going, all you need is one setup. Well, I would disagree with that, because that one setup, if it's the wrong setup in a trending market, it's going to cut you up. And same thing if it's a range-bound setup, if it's a range-bound day and you're looking for a breakout trade, that's never going to work. So I see people doing longs of VWAP on a neutral day type, which might work on some days in a very strong trending market, because even on neutral day types, you will still have a pull to one side. But then people try and do the same thing across the board, and they try to do that in crude oil, for example. That's definitely not going to work. Like bounces of VWAP in crude oil do happen, but they're not nearly as statistically highly probable as they are in something like ES or NQ, for example, right? So there's a clear difference in the way the market behaves. Are we below this GC thingy? Not quite yet. I mean, it's trying. I'm trying to add to this position if we get a dedicated move down. What am I looking for? MGC. Let me get my dome up. Okay. Yeah, so let's add a little bit here. This is micros. So now I'm equivalent to one full position size from about 2530.5. So that kind of changed my average entry a little bit. There we go. But nothing too bad. However, I am going to move my stop down to account for the 35 ticks that I use for this particular product. And let's see if we can get down to that 25.25 already. Yeah, so dome, for me, a little bit careful with it because I would like to have another level there or something else that we might be referencing. And then Yarden has a very good question that weaves straight into that. So he says, hey Dee, I have a question. What is the meaning or the idea behind single prints? I know how to recognize it on the chart, but I don't know what it means. Okay, so single prints are very quick areas that didn't have a lot of volume in it. Right, so they moved very quickly, right, away from a level, and thereby left a hole, a cave, a gap, like however you wanna depict that particular event, And that calls for structure repair. So rather than going, oh, we had a slower move and, we just kind of grinded down or up very slowly over time, what happened is that we had a very fast movement, furious movement that left a hole. Now that hole, just like all other holes, structurally need to be repaired. Think of it as a crack in the wall that's gone a little bit too big. Too fast, too furious, structurally that's a problem. So therefore you expect at some point, which is most of the time not going to be on the same day, but if you've seen single prints left behind yesterday, it is very likely that today the market may attempt to repair those, right? So let me see if I can find a decent example of that. Okay, so I'm going to reference crude oil daily chart for that. So let's move this here. All right, making this a bit bigger so that everybody sees that, because we're not old. Okay, so you see this big drop off. So this is a daily chart, very big. So we left a pretty big move there. And if you look at the volume profile, there is a bit of a gap, right? Well, I mean, it's less of a gap here. For some reason, it's not really showing up. I just wonder if I go like this. Yeah, so we have an area of balance just above it, and then a gap like here from just where this area of this next candle finishes the high. So we have sort of a low volume area from about 71.28 and then all the way up to 72.63. So that's I'm not gonna touch that, but I am going to touch this. So this is the gap in volume, right? Now, interestingly, what the ICT guys call this is the fair value gap. I don't know why that would be a fair value, because I suppose it's a mean of some sort, right? So if we go back there, I would expect these to be filled. And then really my points of interest for further trades after that gap fill, especially if I wasn't in on it, would be the very top of that or the very bottom of it if we're on the other side. But this one, I would say once we fill the gap at 72.18, I might look for more shorts, right? That would be an area for shorts for me. So single prints intraday can also happen. We have a single print of the TPO profile in crude oil. So let's have a look at that. So I'm just gonna change the time frame here. So a strong trend that we have in crude oil. Initial balance today. Initial balance today was from 68.18 all the way up to 68.62. That's where the overnight VWAP was. Nice little bounce. I closed it earlier, whatever. But basically, we have this candle that exits the initial balance, right? And leaves a little single print behind. Why? Because it just moved away. There's nothing else there. So now, if you're going to try and trade the short, your area of interest would actually be the initial balance low after the single prints get filled. Now, there is another play here. If it's a really strong move, the single prints may not get filled today. Okay? And this remains an area of interest for the following day or days, right? So it really depends on how you sort of approach your strategies intraday. So are you somebody who's a momentum trader? Are you a mean reversion trader? Are you a range trader? There's a million things that you can be. And really, I think that for most people, you will gravitate to one of those types just naturally. However, I worked pretty hard to try and be a better range trader because I was a terrible range trader. I'm still not, I still wouldn't say that I'm great at it, but my range bound days tend to be pretty decent because now I've refined the entries and stuff. But generally, you want to gravitate towards one specialty, so to speak. However, you have to be aware of the others. So single print fade is actually something that I like doing, but in order to get the single print fade, there has to be a time of day component. So it can't be early in the session. It has to be some sort of an extended move, and then we spend time building structure somewhere before we sort of start to reverse. And then maybe I have an auction fade that may have a component of single prints. So what I would be looking for a single print fade is for the single prints to be somewhere close by. I don't want them to be this high up, right? Because this is just a directional move now. Like, there's nothing to do here. You can't limit risk very well. And you're now in danger of creating multiple single prints to the downside. Now, I mentioned on crude oil, I have some levels down at 67.18. And then if we don't stop there, I have more levels at sort of 66.50 that might not come in today, right? But yeah, that area of of the low from last week, which is exactly 67.18, that's why I've got it on my chart, that remains a level of interest for me, right? So we'll see if we can get there. Anything in between right now, I'm not interested. But if we are there, if we are at 67 area, I might look for that auction fade. And then let's imagine that we have single prints there. So let's say this rectangle ends up giving us another single print somewhere close to the area that I'm looking for. So another drop-off candle, we start to consolidate, and then I start seeing single prints that are close by getting eaten up. I might look for evidence of that on the tape to be sustained, for more people to do like a sweep or something, just to validate that somebody else with bigger pockets is definitely looking at that same sort of setup. But effectively, the auction fade towards the end of the day, close to settlement, reasonably close to crude oil settlement, would be that final rally into the settlement that we see quite often in crude oil. And it's a take profit move. So it's not massive, but if you can have some single prints to back that up, that would be the strategy to do. So time of day, expectation of what should happen at a particular level, looking for evidence of the market makers, market participants also doing the same. That is the process, right? We never just jump in because there's a level, or we shouldn't, at least. So this is why we say, single prints or, gaps, they need repair because they were made with quite a bit of force, quite a bit of strength, fast and furious moves that need to be repaired at some point in the future. And like I said, sometimes you get the first single prints filled out, but then nothing. You get another move down at the next single print area. Single prints can usually be matched up with the volume profile because you will see them as low volume nodes. And if you're looking for a directional move, I probably wouldn't be going from the first single print that was on the profile. I would be looking for the next gap. So if you have multiple single prints left on the profile, like let's imagine that we now leave this area as a gap, really my directional move would not be looking at this single print, but for a directional move, I would be looking for a pullback all the way up to the initial single print. And then I would use the nearest edge of it. So rather than looking for initial balance low, I would be looking for the edge of it because we've already run through one set of single prints. So by the time you get to a second low volume node, I would expect that to be reactive because we're kind of exhausting the amount of movement that you can get per any single time period. And again, that's statistics, right? So hopefully that makes sense. So multiple single prints, I aim for the second lot of single prints as a directional move, but I aim for the first set of single prints as a fade. Yarden also says, okay, thanks. So repair means going back to those levels and building more volume there. Just visiting. Just visiting. But just by the fact that they're visiting, it builds more volume. So it fills in the gap. And ergo, sometimes at some point, it may not be a low volume node anymore, but it might, go back into balance. That's also something we can look out for. And then when we are in balance in that same area, so we tried to go lower, came back through it, maybe came away from it again, that's now a balance. So what do? You stick away from directional moves and you default back to highs and lows of the range of the balance as your points of interest until such time the price breaks out. And then the same nonsense, right? So looking for gaps, looking for this. It's all just like a cyclical nature of what we go through. So we have directional moves, range-bound moves, directional moves, range-bound moves. So if you can learn to track those objectively, and then just to start get an overall contextual context and contextual awareness of the market, then you've got a real set of pro skills on your hands. But what we see people doing, VWAP long. Is that a strategy? Yeah, it's a strategy. Is it situational awareness? No. Why? Because they have no idea whether they're going into overhead supplies, whether we're in balance, whether we're in directional market. They're not interested. They're just chasing adrenaline, That's all they're doing. NQ, more trading. Okay, Eric1M says, what tools do you use to read momentum? 9EMA. No, so I use 9EMA as a timing tool. I don't really use it to read momentum. I use it to keep a pulse on momentum. It's like, because it's a lagging indicator, you will only know that it's a momentum when you're already on the way. So right now, crude oil, pretty good downtrend, but my levels are not based off that. And my breakout ideas are also not based off the break of the 9EMA. My levels generally first and foremost come from supply and demand on larger time frames. So 1 week, one day, 4 hours. Then if I have the evidence of a directional market, I may try to do a failed auction from VWAP, for example. This is what we had on crude oil. I was in on this trade, decided to close it. And again, this is where I'm a little bit in two minds about whether my penchant for holding trades longer is a weakness or not, because, these things happen and I'm not in on them. When I was in on them, I close it, it runs. And it's like, damn it. That kind of tends to annoy me more than actually outright losing a trade, because I was like right on direction. But when it comes to the actual entry into the breakouts and momentum trades, again, I want to see either a failure of the auction, or I want to see the value area breaking down. So acceptance of value, that's a momentum trade. If we are away from those levels, I'm not too keen to run a momentum trade, and I would usually like to do a reversion trade from somewhere away from those levels or around those levels. So if we're kind of hitting, let's say, the swing extreme, some kind of support, for example, like I said, I have the 67.18 as my interest for long, so I want to be a buyer there in crude oil today if we get there. I may look for a mean reversion trade. And at that point, I'm not going to be going in when momentum is already on the way. That's way too late. This is the problem with momentum traders, where they only look for entries that make me extremely uncomfortable. So unless we're actually breaking out of IB or something and sustaining above it, I don't like going in off the breaks of lows and highs that were there previously, because I've observed that on most occasions, those breakouts fail on the first try. And then the new short side, the new shorts that are trying to get into the market, they spend forever trying to build power to kind of push more outside of it. So unless you're like a scalper, where you're just looking for a quick scalp out of that area and you're out, to me, I don't like doing that, because I'm not a core scalper. That's not what I do. In fact, I don't scalp unless it's a range bound day. That's when I turn into a scalper. That's when I will do a ton of trades. But generally, I would call myself mainly a mean reversion trader. That would be like my strength. Looking for areas where we may fail the momentum and then going against it, like a contrarian. To a sensible degree. I'm not a complete lunatic where I'm like, we're in a, trending market, we're going up, all-time highs, let's short it. So I don't do that. Not that I haven't done it, I have done it, but generally that approach doesn't work, which is why I stopped doing that. So I look for sensible stuff. So if I'm looking for a mean reversion, I want us to start spending a little bit more time horizontally. So this is where maybe a flattening session VWAP might work, or flattening 9 EMAs on a 3-minute chart might work, where the momentum is waning. But I won't use the momentum to run a mean reversion trade. I will use price action for that. And other clues. If we have single prints left behind, that would be my first point of entry. It's like we're taking out single prints. Let's go again. I might see something on the tape because on one of my other screens, I always have bookmap open. And I do look for things like sweeps, absorption, stuff like that. If there's a lot of shorts still trying to sell, let's say at my level of 67.17, but the price is glued to it and it's not moving any lower, that usually means that the sellers are not getting what they want, and very quickly you see them bailing, which then causes a little squeeze. So that's a setup that I like doing on ES into the end of the day. And it's like an old pit trade sort of thing, and you will typically see quite the opposite in delta. Maybe you have huge negative delta, and then at some point all of that causes a squeeze back up, or you have a positive delta that causes a squeeze back down. That's a thing as well. But I do try and match it up always with my levels of interest, points of interest. I don't just go looking for a short squeeze. So you have to have levels. Point being. Joe says, please refer to explanation of the low volume node in CL. The low volume nodes in London session can reference the COMEX session. How do we place single prints between the sessions? You don't. The single prints that are referenced are on the daily chart, visible to everybody. And usually they're in COMEX, but recently we have been getting them for London as well. I mean, look at crude oil today. So anytime you have a big movement away from a level, that causes the low volume areas. Now, I'm not seeing them today. This is a balance. So this is not any kind of low volume. This is a balance. This entire move is actually in balance. There is some low volume nodes further down into 67.14 as I start to move this down. So there they are. So I have a lower volume area from 67.50 all the way down to 67.17, which is why, again, I'm referencing that area for potential reversal. Right now, all I'm seeing on the larger time frames, like we have single prints that were made intraday in the TPOs, but I won't be referencing those for COMEX. COMEX is a whole different set of players. COMEX has a lot more volume on a lot of the days. So although that has been very tricky this year, but generally that's its main session. So if we make single prints during NYMEX, those will be more significant because typically they will come with more volume than the single prints that were made during London. And if you want to compare those two, the single prints from London will be reversed. They will be completely chewed through. And is there a repair of the structure? Probably. But right now, the way I'm looking at this from a larger time frame is that this is one big balance area, right? And on an intraday time frame, we have single prints during London that may not be there anymore. They may get chewed up during NYMEX. But this doesn't mean that we might get that today. Single prints may stay until tomorrow, and we may move further down away from those levels and into the 66s. So I have 66.50 as my next level of interest for crude oil on the downside. So if I can catch this directional move and there's no real reversals for, post NY cut, which is after 3 p.m. my time, yeah, that might be a directional move play. Just gonna see what's happening with the ADRs. So we're far away from the daily ranges. So yeah, I would say this might be a normal day for now. So we didn't even exhaust the average session range low for London, which is at 67.43. And then I have the average daily range low, which is closer to that 67.17 area. So yeah, I mean, I would be looking for longs anyways around there. Just there's a number of things that are telling me that is that's an important level, right? So now, anything in between is going to be tricky. So I'm probably going to wait it out to, see what happens a little bit later. And I'm not going to be chasing crude oil, trying to get the move down. So yeah, and as a general rule, NYMEX tends to reverse London moves, just like generally. If you look at like over the last 10 years, what's happened on crude oil during NYMEX versus during London, so not just taking any isolated year into consideration or 3 months or 2 months or 2 weeks, you go back enough sample size. Even during COVID, during the craziest crude oil movements before they stopped trading, before they halted trading on it, when the crude oil futures went negative, what's happened is that it literally, you have London doing one thing, then NYMEX comes, there's a reversal of some sort, and usually happens after 3 p.m. my time, which is 9 a.m. Central, 10 a.m. New York. And that's because of the knock-on effect in options, right? We do have options in crude oil that have been causing a lot more trouble recently and a lot more impact on price. But back in the day, I used to compare the CAD options, Canadian dollar options, and see which one was the largest, and then just looks at some expiries and strike prices that had the most size to them. And then I would use those as sort of magnets. But I know that crude oil futures also have their own options, and these 0 DTE options, which are not, like the 0 DTEs are not an actual option type. It's just when the trader decides to take it off, and then you're expecting a whole bunch of people to trade options intraday, and they will sort of, there's a lot of volume when they decide to bail out of those options. So that's why they've been causing a lot more trouble. And this has been happening since post-COVID. So I do keep an eye on those. They're not like the primary way that I look at the markets, but I'm aware of them, if that makes sense. So that's something to consider. Future Millionaire says, what is your definition of mean reversion? Do you look for the area it has been traded to? Well, typically it's going to be a mix of average daily or session range highs and lows. It will be maybe a outer value edge after a big gap fill. So let's say that we opened with a gap of about 150 ticks away from value from the previous day, and then the market starts to go into a gap fill. Well, once we get there, you may have a mean reversion down, right? Even though the gap fill itself might be a mean reversion, but to me that's more of a momentum trade, because the guys from the overnight session moved it too far away, and now the guys that are coming into the session, they're like, we can't make money here. Let's go back to some sensible prices. And that's why the gap fills happen. So it's basically the market makers just saying, whoa, man, we need some prices that are a little bit cheaper than that. Let's go back to value. Why? Because value is the distribution, is the mean. So I would be maybe looking at that, but like I said, that's more of a breakout trade than a mean reversion to me, because I never go in on those as a mean reversion. I always go into it off a break of the initial bounce. So in my head, that's more of a breakout trade, if that makes sense. So that's how Dee does breakouts. Initial bounce breaks back to value for a gap fill. Anything other than that, it would be average daily or session ranges. Or it would be the market that moved all the way back to value, and now I'm looking at a mean reversion intraday from that value area. Like, it's all messed up, I know, but to me it's down to how much movement we had prior, right? So did we move quite significantly away from the level, and are we now running out of steam? At that point, there's a mean reversion trade. So whatever that is for you, that will be a mean reversion. For me, like I said, I have some points that I look for as interesting areas. And I look for the lack of momentum. Sometimes if we're taking time, and then let's say we hit lunchtime, I might actually wait it out all the way until after New York lunchtime, and then I might pop in a trade. That is always some sort of a mean reversion, or in most cases, unless we have like a single direction day. Joe says, low volume nodes, do you check daily chart or 30-minute chart? For the low volume nodes, I check the overall volume profile on larger time frames. I very rarely reference intraday levels, because I think they don't hold as much relevance. So again, balance on a larger time frame, somewhere around that area that I already mentioned. So around 71, 68. That's a low volume area. We're coming into some low volume areas here, but they're we haven't really traded much there. So we're going to see what happens anyway. But yeah, for now, the only kind of low volume area I'm seeing is the one much higher up. And then we have a whole balance from around about, let's say 71 roughly. Although that's a low volume as well. So let's say 73 all the way up to 80s. That's like a nice sort of balance area. But yeah, for now, I just reference the volume profile on very large time frames. I always have it on my chart, but I look at some other things for intraday to get a little bit more granular. Volume value also, to me, doesn't have as much detail. And just the volume profile on the intraday level, I prefer the TPOs, because we have the initial balance. You can see the single prints. It's very difficult to see that to such a granular level on a volume profile. So I only use it as kind of like a bird's eye view thing. All right, let's take a couple more questions, and then we're going to finish it up. Okay, just one more. So it says, oh, hey, it's me, ROTBI. Okay. Dee, can you give us a reading on gold, please? So right now, gold is going against my trade. I have VWAP as the final sort of reference point here. If we don't bounce from VWAP, this is going to be a failed auction trade. Long, and at these levels, I don't want to do any longs. Not interested. So right now, we tried to go lower. Not much movement into the gap fill, which was my idea for this setup. If I don't get that bounce lower from VWAP, that will be it. So that will be it for gold, and then nothing until I see exactly what's going on with gold. Yesterday was looking very messy, but today, we're still inside that balance area. It's still not a very clear read. If we go up to the daily chart, look at this. It's just like bunched up price action. There's no momentums, no trend, no nothing, pure balance. So yeah, we'll see whether there is any sort of life in gold today. Maybe when COMEX kicks off, but until then, this is obviously not doing much for now. So yeah, very balanced market. I don't like to trade bunched up areas that have not a lot of movement. It's always easier to find a trade when you have something going on directionally on larger time frames. We don't have that. We're at all-time highs. We're balancing. The reason why I went into this, because I am expecting the liquidation at some point to take hold. And we had a potential for gap fill, so that kind of played into that hypothesis. But on an intraday level, they're still not moving it. This is one of those London sessions where we're stuck in a 70-tick range, which is, it's a bit tricky. So 70-tick range for the entire London movement and a 57-tick range for the initial balance. So now if a VWAP overnight cannot cause a bounce lower, I don't want anything to do with this market. I'm not longing at all-time highs when we're away from lows of the ranges, because the low of the range is really at this area at 2500s. So I want to be a buyer, maybe at 25 evens, 2502, all the way down into these 2490s. So that whole area is where I want to be a buyer. Up here, I want to be a seller. We've also had some supplies that have been reactive. We are a little bit away from them, but it's so bunched up. Like, this is so ugly. So it's not a pretty chart. So how do you find your way here? Again, edges of ranges. Why? Because we're in balance. Edges of ranges, 2500 and the all-time highs. Do we want to short all-time highs? Probably not, until we see some evidence that all-time highs are turning into a resistance. So until then, it's a dangerous play. Coach Jay has joined us. I love seeing Coach Jay in here. Good morning, good morning. I'm about to finish, actually, but yeah, nice to see that you're up bright and early. So gold to me is a bit messy on the day time frame, but I did think that we had maybe a potential for that gap fill. Didn't really happen. So I'm probably going to be focusing on crude oil for the rest of the day, because it just looks a lot more movement, liquid. If I compare the crude oil chart on the daily, it's a nice trend down, right? So yeah, there's a little bit of chop here. But if we get down to those 67, 17 areas, I want to be a buyer there for crude oil. So again, the contrarian D, trying to get the mean reversion trade back up. So we'll see what happens, but 67, 17 all the way down to, even 66.50. I've got a level at 66.50. So that whole area is where I want to look for potential for reversals on crude oil. And gold, tried it once, didn't happen. If VWAP cannot hold this thing down, I'm not going to be looking at gold for the rest of the day. All right, guys, we've come to the end of the time for this session. I've actually gone a little bit over like I usually do, which is okay. I like hanging out with you. If you found any value in what we were doing here, please click like. If you're not subscribed yet, please click on subscribe. Now, let me just see if I've got anything else. So if you want your stats analyzed, there is the group coaching form that they will be pinning. Well, actually, I suppose I can do the same thing. Do you know what? I can't find the link right now. So during the main broadcast, they will plop a link in there. So if you want your stats analyzed, drop your stats link in there, and you will get your answer. Other than that, I think that's it for today. Obviously, we have Coach Dakota takeover. I already did that at the beginning of the stream. Excellent. Guys, let's see what today brings. It looks like there is some movement in the commodities today, particularly crude oil. Again, take it slow. Don't rush. We have some big releases tomorrow and Thursday. So try to leave a bit of the budget in your XFAs and combines for tomorrow. A little bit, don't run them all into the ground today. And I will see you again tomorrow for another London session. So until then, take it slow. Enjoy the rest of the day. Enjoy the rest of the broadcast. And I'll see you tomorrow. Take care.